Joining us right now is Jim Paulson, Chief Investment Strategist for Luthold Group. And Jim, it's great to see you. You've been bullish, but I'm curious what you think we're going to hear tomorrow from Powell and how that could impact things one way or the other.
Yeah, I think Powell is going to tell us that more or less that the Fed is going to work to raise inflation and not be so concerned about inflation going up. I personally think after years of worried about global stagnation and disinflation, deflation, negative yields, lack of sufficient growth, I think the market's going to react pretty favorably to that idea of maybe finally, rather than be captive to some specific rule about 2% or something, to let this thing rip and let's see what we can do with the economy a little bit. I think it's more of a positive outcome. Now, I think there's risk involved in that too, Andrew, down the road. If anyone who lived through the 1970s can see what that might be. But I think in the short run, I think it's a positive speech is how it's going to be taken.
Jim, in terms of the way you're setting up a portfolio right now, there's been a lot of conversation about whether you should stay mostly concentrated in the big tech names, which obviously has been a successful approach thus far, and when and if you should rotate out or at least add money into some of the more unloved cyclical names ahead of what might be the expectation, of course, is that we get a vaccine, whether it comes sooner or later. Who knows, and whether and how effective that vaccine is going to be is the open question. But when would you recommend people make that move, if you're recommending it at all?
I think you already should be shifted there to some extent. Look, off the lows from March 23rd, a lot of the cyclical sectors, a lot of small cap stocks, the equal weighted S&P, the value line arithmetic equal weighted, even international markets have done a lot better, Andrew, and many of those that I just listed have outperformed the S&P 500 overall on a cap-weighted basis. So I think a rotation's already taking place. It's not dramatic, it's not robust, but I think it's already starting, and I think it's going to get more robust in the coming year. One of the things we've done here.
Would you jump into travel names, for example, though?
I don't know if you have to go that deep. I think I'd be okay with that. But look, you can buy, rather than going all the way to the kind of the epicenter of the pandemic swing here, you could just buy some general industrials, some financials, maybe some well-financed energy overall, and still have and go small cap in general, for example. And still have a pretty big bet on a leadership shift, but not necessarily have to bet everything on just COVID shifting. I think the better bet here is to bet on economic growth doing better. I mean, we're in a quarter right now, maybe 25% real GDP growth. The expectations by Wall Street right now over the next year is for the pace of real GDP growth, the annual pace, to improve by 18 percentage points year on year from what it is right now. And I think if it does that, it's going to create a leadership shift. Whether the airlines are back full or not, it's going to create a shift towards cyclicality, small caps, and international, I think, over the next year.